Hey everyone, welcome back to 5-Day Crypto. My name is Chase. Today we're going to look at Chainlink. We're going to look at Link on the daily chart, the weekly chart. We're going to look at some indicators. We're going to look at the Gaussian channel. We're going to see just what's going on, what levels we could be looking for retracement, what levels we could be look for to the upside, to the downside, all that's good stuff. So if you like the video today, give us a thumbs up. Follow us on Twitter, Telegram, Patreon if you want to learn a little bit more and get notified of key updates. So let's look at Link and start on the daily chart. So these are our exponential moving averages, 21 day, 50 day in the green, 100 in the blue, 200 in the red. So far, we've done pretty well holding kind of roughly that 200-day moving average. Today, we're there again. We broke below it a few days ago, broke right back above it the next day, which is a good sign. And now we're holding that key structure. Let's continue to do that. Let's look at our crossing up on our moving averages. Those are always good signs. When you have shorter term moving averages crossing back to the upside, that's what you want to see. And on the other side of that coin, you don't want to see them crossing down, right? So when our 21 crossed our 50, that was our big drop. So maybe our 21 crossing our 50 now is the start of our big rise. We shall see. We still have 8.5 hours before we close this candle, but it would be a nice sign to start closing above this 200-day and getting some momentum to the upside. Now, if we flip over to the weekly, we have some more good news. Well, we've made a perfectly nice bounce and close off that 100-day moving average. Broke right through the 50-day or 50-week, excuse me. We're on a weekly chart now, so each candle is a week. And these are the weekly moving averages, and the same thing, 21, 50, 100. So we're currently holding a bullish sign is when you're holding that 21 week as support, as you can see in said chart here. After you break above it, you want to hold it if you come back down, and those are when you can get the bigger moves. So right now we're battling to close our first weekly candle above the 21 EMA since the big drop. This would be a first big sign for things turning around to the upside. This is macro scale to the up. Could we have some choppy waters in the next few days? Of course. We're going to get into all that stuff. So that's your moving averages. Good signs there. Holding above our 21 week. That's what we want to see. Let's drop down to the Gaussian channel. On the Gaussian channel, we like to use this on the 5-day. It has the least amount of fake outs, the most stories to tell for the most concrete evidence. So as we drop down through these bands, the top line, the middle line, the bottom line will act as support and resistance. If you break one, usually you'll test the next one, depending on which way you're going. So we hold the support back in early May, or late May, I should say, and then we break it with the candle, and we come back down to support for a week, break that. Once we've closed a candle under said moving average or moving line here, support structure, you're likely going to test the bottom, which we did perfectly. Anytime on a Gaussian channel 5-day that you're at the bottom or even under it slightly, you can look at this on any coin. It's usually your buying opportunity of a lifetime, or at least for the next move up for the next 6 months, year, 2 years. You can go look at Bitcoin. When's the last time we were down at the bottom here? Well, as the pandemic drop, we were near that Gaussian channel drop. Bitcoin and Ethereum you can put this on the 5-day. It's just a great tool to add to your toolkit to help you become a more successful trader. So right now we're broken back above that median line. We're holding it as support. Look again. Let's see when this has done it before. Look, we held this support back here, held this support right here for almost a month right here, right? After the pandemic drop, we're battling, holding that median line, and then we have our big move up. So it doesn't mean we have to shoot up immediately to this top line, but if we continue to hold this like you saw back in 2020, we should be testing this in the not so distant future. It doesn't mean we have to do that first. It doesn't mean we're guaranteed to do that. Nothing is certain in crypto but uncertainty. So don't take anything as 100% guarantee ever. Okay, you just have to play the odds in crypto. That's all you have. Even the world's best hedge funds lose money. They just make a little bit more than they lose. That's all they do. It's just they happen to be dealing with billions of dollars. So they could be wrong 40% of the time. They just have to be right 60% of the time to offset that. So they're right 10%. Basically, they make money on 10%. See how that works? but they're just dealing with billions. No, the world's best traders are still wrong time to time. Okay, so now that you know that, all right, now let's look at the weekly Gaussian and see what we've got going. Well, look what we've done here. On the weekly, we've actually held pretty much support on this median line. We dip below it for one candle and then shoot right back above it. And now look, 3 weekly candles in a row holding resistance right on that top line. I mean, right almost to the dollar here. Perfect wick, perfect wick, perfect wick so far on the top of that Gaussian channel. If you see us break outside of this with a weekly candle, that would be pretty big sign, since we haven't done it since our drop. That would be a nice sign to see in a big term level that we're reversing the trend back to the upside. No one will be watching this, so you'll be ahead of the crowd if you see this happen. So that level right now is 25.52, which coincidentally we've wicked to exactly 25.52 today. Okay, so we want to, if you see us above that with a candle, we have to close above that, not the wick, candle. So we still have 5 days, 9 hours. But if we can somehow, we don't have to do it this week, but the longer it takes, it's okay. We're just kind of knocking on the door, right? So if we have more pressure to the upside, eventually we should be breaking out of it. So that's what we want to look for on the weekly Gaussian channel. Now let's drop down and look at some more good news. The Chainlink Stochastic RSI. Look at where we are. Bitcoin looked just like this last week. Now Bitcoin is up in here. So with the red, we want to do the red. The red is the average of the blue, the stochastic. The blue's good sign, but you want the red. You can see how much more smooth the red average is over the blue, right? Look at the jig-jag, right? So the blue moves a little bit faster. The red says, nah, we'll smooth you out here. Okay, so that's what I want to wait for. When we have a move, it should happen as long as Link doesn't take a, dramatic drop over the next 5-6 days. This should play out to where we get some more momentum. Weekly momentum is big in charts. You can go look at, this is our last move. We were at a few dollars on Link here, maybe $5-6. Someone could look that up. But we went from roughly $5 all the way up to, this is a pretty big move. We went to, I think, $30-$40 here, and then, we're losing momentum, and that's when we get our drop, even though we actually made our high down here. So pretty cool to see. This is when you can really get liftoff on a lot of moves. Bitcoin is already looking probably pretty similar to kind of up in here. It's already up around the 40 level. So good signs out of Bitcoin. But this is also, I want you to remember, macro longer term levels. It doesn't mean we're not going to have a slight pullback every now and then. 10% is certainly on the cards at any given moment in crypto. Don't freak out if you wake up and see Bitcoin down 10%. It doesn't mean the party's over. It doesn't mean we can't continue the upside. There's signs we're a little bit heated for the short term. For the rest of this week, maybe we can go up a little bit, but I would expect a short-term pullback before a more macro bullish move. Just my opinion. All right, Link RSI. On the weekly time scale, these are our 3 peaks, our 3 highest highs, and our 3 lowest lows here. So look at where we are. This is 2018, our low. We were at under like $1. Then we had our nice summer bubble up. Nice move there. Look at these. These are like pretty much similar levels for the lows. These are the times that you need to be. If you're a smart investor, you buy at these levels. If you're a smart investor, you sell at these levels. See how extended these are and how rare that is? Now notice that our peak, when we hit $53 roughly with the Link over in early May, look at where our high was, right? It wasn't where these other previous peaks were. So that's why Link has not really made its statement run yet. I think that's still coming. So what do we want to look for to get that statement $100 plus Chainlink? I'm glad you asked. It is this move, right? This box that you see here, this is kind of where I like to think that the bulls start taking over when we get above here. Notice some support levels here. Once these start holding, we're close. I would say 52-ish level. Once we're up there on a weekly scale and we're holding that as support, you can see it could take a little bit more time. But once we hold that, then we want to move up. And notice our downtrend here for, the rough downtrend on this RSI. We need to break above that as well. So if we can do that and break this trend and start holding this top as support, moving back to the upside, okay, then our $100 link could be on the cards. Notice that also, watch this. Look at our moves from our lows to our high. This is roughly 200 days and 123% move on the RSI, right? 200 days, 120% move. Let's take our next bottom. So roughly 150 days and over 100% move again. Okay, so we haven't had that kind of move for a while, but we also haven't been this low for a while, right? We didn't make our ultra low again, so maybe that's why Link couldn't make its highest high again. So now we're low again. So let's take maybe the average of that. 175 days puts us right at the end of the year, the start of 2022. The average of we had 200 days, 150 days roughly, and now so say the average of that puts us at the end of this year, and to do another like kind of triple peak up here, 120% move again, get back above the 90 on the weekly RSI. Link would highly probably be, it'd be highly probable that Link would be well over $100 if this were to ensue. But you can see that is pretty rapid rise here. As it's done though, these two peaks both did that in pretty much the average of this time. So it is possible. I'm not saying this is likely or probable or anything like that, but this is what you want to look for if you want to see $100 Chainlink this year. It needs to follow this path and it needs to get going pretty much in a hurry, as you can see. So we have less than 175 days now until the end of the year. So we got to get moving. We could still have some pullbacks. Look at this. Look how much time that Link spent just dilly-dallying around on these RSI levels before really just rocket ships. Again, we can have, some time to go up and down, right? We can go up and down. Link often does do that, right? Slinky up the stairs is what Link likes to do. Then every now and then it skips a few stairs and goes way up. All right, so that's what we want to look for. We want to get a peak above here, close to 90 on the weekly RSI. I would highly anticipate Link would be well into 3 figures. So that is that. Now, the crypto fear and greed index. Where are we today? Back to greed, 71. Yesterday we were at 65. We're up even higher now. Okay, good sign is that we broke our previous high of 73 back here. We're now at 74. What do we want to look for? If we get one of those short-term pullbacks, we would like to hold the 42. We would like to make a higher low again. So 43 would be fine. If we come back down into fear, I think under 50 is fear. So if we go back into fear at 43 and then go back up again, that's a great sign. That's what we want to see. We don't want to break this. That would break a little bit of structure. Our year-long support level is 28 right here. We can't, or 38, excuse me, 38. 38 here, right? 38 again back here. 38 many times back in 2020. So 38 is our critical market structure. We certainly don't want to break that, but our short-term structure is 42 for the low. If we come back down 43, what do we want to do next? Well, we want to make a higher high above 74. So we could do that tomorrow or next day, whatever. Just big picture, that's what you want to look for. I'm giving you more tools to add to your toolkit so you're ahead of the next guy, okay? Quote of the day. No legacy is so rich as honesty. Who said that? William Shakespeare. I'm sure you've heard of him. All right, now let's get to the funny part of the day. What do we got? Maybe we'll start doing some crypto memes. This is appropriate for new traders. No idea what I'm doing. Me 24 hours ago. Me today, Gordon Gecko. I thought it was pretty funny. So maybe I'll do a new one of those every day. Let me know what you think. You want to do a movie every day, one of these every day? Maybe both. Maybe none. All right, car of the day. Anybody, any guesses what that is? Someone knows what this is. If you know, you know. Celine S7 It was an early 2000s car, made in the early 2000s. Super fast for its day. It was one of the coolest, fastest cars around. But why didn't it succeed? Any guesses? Well, no one knows for sure. Oh, and the doors go up. I mean, it's pretty legit. It was in one movie that I know of. Let me know if anybody knows that movie. But why didn't it succeed is based on what I've heard from the people that owned one of these, is the interiors were overly basic. I mean, like ridiculous, like less sophisticated than the most basic Hondas or any of the economy line cars. It was like overly redundantly bad. Too much noise, road noise, not comfortable seats, all that stuff. So you're going to pay $1 million for a supercar. It should probably be a little comfortable and pretty tech savvy. But outside, the looks immaculate to me. I love the looks of that. But yep, didn't really take off early 2000s, but a couple people got them. Kind of collector's cars now, but not good to drive. Maybe just to look at. All right, that's it. If you haven't liked the video yet, what are you doing? Give us a thumbs up. Follow us again. Twitter, Telegram, Patreon. Everything's linked in the description below. I'll see you in the next video. Have an excellent Tuesday.